Hey, what's going on, guys? Just going to do a quick recap of the trades I took for the week of Monday, the 23rd. It was another profitable week, third in a row, so really happy about that. Things look to be turning around, well, for the time being at least. So it was a short week, obviously closed for Christmas Day. Only taking 4 trades. We had 3 losses and 1 significant win. And the first loss we took was on the pound dollar. We had the ET bot alerts paint a sell signal and the STC turned red on the very next candle, given a very valid entry, but unfortunately we got moved into the stop loss the very next candle. And then we were closed for Wednesday, but picked it straight back up on Boxing Day on Thursday. Had a really nice trade here on the Euro Yen. The bot alerts printed a buy signal at 1 o'clock on Christmas Eve, and we was obviously closed for Wednesday. And the STC turned green in the early hours of Boxing Day. And this candle here should have been my entry. All my back testing says, as soon as a first little pop up, a first green candle popping up, whilst the STC is green, means that's just a definite entry. So I should have gone in there, but I just wanted to see a little break of this bull flag first. I just held back. I didn't know how the markets trade around holidays and things like that. So I was like, if I could see a little break of this bull flag, I'll be really happy. And we can get in just a tiny bit later. And so that's what we did. And we got a really nice move upwards, returning a 4.57 risk to reward. £206 on, I think it was about a 1.9% risk on my account. So really happy with that. And unfortunately we followed with 2 losses on the Thursday on the Aussie dollar yen. However, this had been on the Thursday at 4 o'clock yet. So we had the UT bot alerts paint the buy, and it was green, but it was a kind of a rejection candle. So we was waiting to see a little pop up. And we did at 4 o'clock on Boxing Day, but unfortunately moved down to the stop loss over the next couple of hours. And the final trade was on the Friday yesterday on the Euro Yen. Really valid entry there. The STC is very close to the 75 value. We prefer it to be at the 100 when we take a short, but it's still valid entry. Unfortunately, next couple of candles stops us out. But yeah, like I say, third profitable week in a row. We're very close to back to break even now. You can ignore this. I'm not really keeping up with this. Yeah, there was a 9 loss streak here, which, as we know, in our back testing, there are plenty of 9, 10, 12 loss streaks. But it's over the course of the year where it proves profitable. And very briefly, I'll just show you what I've been working on this week. The strategy's kind of been flipped on its head a little bit. I found quite a game changer. I've been trying to improve the results of the data I have. I've recorded these 3 pairs over the last 4 years, 2024, 23, 22, and 21. And so that's my control set data. So I can keep things consistent. And I've gone back, and what I've been looking at is, I'll show you this scenario. So this is March on the Euro Yen, and so my entries, once I get an entry candle, my stop loss is always going 3 pips below even the wick of the entry candle, no matter the length, even if it's really significantly longer than the candles in its range. And my justification for that was, well, if the market's just made a significant move, there's a lot of volume in the market right now, it can make a significant move down. So I need that big stop loss, and I just sort of went from there, developed my whole system, been developing it for months. But it's occurred to me this week that what if we develop some sort of system where we actually take a much shorter stop loss, maybe looking at the ATR, and that's exactly what I went and did. So I rebuilt my system to look at the 2000 simple moving average ATR. And look at that at the beginning of each month. Write this down. So on the Euro Yen in March, this would have been 0.216, and I will have that as my maximum length for stop losses now. So if anything's under 0.216, fine, leave it as is, 0.150 and stuff. But in this scenario, where we've got a 0.730 stop loss, I would actually be now moving my stop loss down to 0.216. 216, yes. 0.216, and obviously, in this scenario, it's obviously greatly increased the results to a 6.13 risk to reward rather than a 1.8. But with that, obviously, the win rate decreases. If I'm going to be doing that, we're going to be getting stopped out more. So I thought I have to test this, and so that's exactly what I did. I took all of my data that I've recorded from the past 4 years. This is my control, got 2023, 2022. And I put that onto a new sheet, and then I started recording the difference, taking these new stop losses. I write down my stop loss for the beginning of the month, And as you can see, like I have a loss here. This would have returned, let me find a better example. So right here on the 19th of April, this would, on the left, you can see this is our original result, taking a 1% risk. So we would have returned 2.12 risk to reward for $53, risking 25. But with the tightened stop loss, we would have had a loss, negative 25, so a difference of 78. Because of course I'm missing out on the 53 and I'm losing 25 if I want to sum my difference of the strategy. However, there have been some really good results in this. You can see here, the 5th of June, what was a 3.93 risk to reward, then turned into a 6.98. You can see there are losses. It does decrease the win rate. However, you can see 3.12 to 386, 709 to 83, 461 to 528. And that was just one of the pairs. You can look over here as well. The pound dollar back in February of this year would turn a 1.82 into a 470. Really improving results. A 183 into a 741 risk to reward. So I crunched all the numbers. I tested. I went back and I copied the charts that I have, the set in stone data that I have in TradingView, made copies, and started adjusting things, keeping my take profit in the same place. And the results have proved to be really good. I tested the whole of 2024, 23, 22, and 21. Every single trade has been marked out. And then I crunched the numbers through the AI, and yeah, this is going to be the way we're going to be doing things going forward. So on the left-hand side here, this is the net increase, the original result of taking 1% risk on the pair, trading the strategy, starting with $2,500 each one, so $2,500 would have returned $1,300 without this, and with this $1,400 would have returned $822 without this, and with it $1,075. As you can see, in every single scenario on every single year it improves. And then yeah, after I've crunched the numbers through the data analysis AI, so this would be starting with a $2,500 account in 2021. Without implementing the system, you would have had $2,800 profit. With this system, $7,700. Improved 2021 by like 5k, starting with 2,500, which these numbers sound unbelievable. I need to prove this yet, trading it live. They won't be quite this good, but it's definitely improving things in the system. Interestingly, it knocked off some of 2024's profits, but 2024's numbers have just been insane. I don't know what's gone on here this year. Hopefully 2025 is the same. Now I'm trading it live. Yeah, interestingly, this knocked some money off, but overall it is just improving the system. So that's how we're going to be trading going forwards. But yeah, that is the end of 5 weeks of trading now. We're just a bit below break even, but really happy. I'm just learning more every day, getting better at discipline and executing and things like that. And I'm really looking forward to next year. But yeah, okay guys, hope you have a good new year, and thanks for tuning in.